Hi, I'm Kerry Grinkmeyer. I'm the host of Best of Us Investors, and I'm preparing for a recession. Yes, I believe the market is going to go down and the prices are going to go down. And what does that mean to an investor? It means that there will be a buying opportunity on some of the best stocks, some of the best companies in the world, if you have the money to buy them. If you can round up some cash, this is the time to buy. And I'm going to basically take advantage of this. We have runaway inflation. If you call 7.9% runaway inflation, we'll look and see if in fact that is. We have interest rates going up. What I believe the mortgage rate is now up to about 6.5%, up from about 3.5%. So that's substantial. We have volatile markets. We have a labor shortage. And we have a war going on in the Ukraine. And this is creating fear. And it's also, but more importantly, creating a situation in the Fed that says we've got to bring this under control. And what does that mean? What does that mean when they say we got to bring this under control? They need to affect you to stop you from buying so much stuff. They need to raise interest rates. So you consider, do I really want to buy a new car and take that loan out? They need to raise interest rates such that you say, I don't think I'm going to buy that new house after all, or that vacation home, or maybe we're not going to take out that loan to remodel our home, or maybe we're not going to take out that loan or put on our credit card that vacation we were planning. Maybe we need to pull back at this time. That's what the Fed is doing. They had broadcast all last year that this year they were going to raise interest rates 2.5% a number of times, 3, then it went to 5. Now they're saying we're going to raise them not 2.5%, but 0.5%. And that is scaring people. It is scaring the market, and the market is pulling back. And you're seeing some buying opportunities on some wonderful stocks. So I look at it as an investor, a long-term investor, and say, what am I going to do? What are you going to do, Kerry? I'm going to take advantage. But first, I want to look back at history and see if there is some guidance for me as to what I can expect to happen. Okay? So that's what we're going to do in this video, but this is not financial advice, and you knew that.
Best of Us Investors presents Kerry Grinkmeyer.
So again, what I'm going to do is gather some cash. I'm going to buy some great companies at depressed prices. I'm going to buy into those companies at depressed prices that I think are going to change the world I live in. As I look back on my Trading Views charts, I can find a similar time in 1977, 78, 1980, and I can see a duplicate of exactly what is happening today. I can see that we were pulling back as we entered into the digital revolution that lit the fire under many stocks. I'm going to take you to my computer and I'm going to share with you some charts that I put together and some graphs that I created to show you exactly what I think is going to happen, and what then I'm going to ask you to basically do what you think is best for your situation. So let's go to the computer. We tend to talk about inflation like it's the kiss of death, that it will kill the stock market. So what I wanted to do was go back and find a history that I could look at that when we had a comparable inflation rate, right now it's 7.9%, and what happened? What happened in the subsequent years as we brought that inflation under control? So I created this chart on Trading Views, and then took a chart that I had done before, or a spreadsheet I had done before on the development of Apple, and I went back and I found that we had inflation in 78 at 7.6. We're now at 7.9. It had come up from 5.8, 6.5, 7.6. So where is that on our graph? Well, that's 78. So that's about right here. Does that look familiar? Okay, so then it went from 7.6 in 78 to 11.3 in 79. That's right here. Okay, then it went from 11.9 in 79 to 13.3 in 80. That's right here. The market's moving sideways, but you can see it's where it's going. As we get to 81, it comes down to 10.3, and we have launched into the digital revolution. We're moving towards the digital revolution. What you see in this blue line is the government's reaction, and that is our debt load. The government's reaction to inflation, monetary policy. And in 82, inflation starts coming down. That's about right here. So we had a downturn on the market, but I think we all know where the market went as the Fed stepped in, increased money supply, and took the market up. So I'm looking at this and saying, all right, that's history. So I have an understanding of possibly where this market is going. Now we go to a more forward-looking chart, and I think it's obvious what happens. The market gets to the late 80s, and we go into the internet revolution, which takes us to where we are today. So my take on this is a part of a natural business cycle, and we deal with it. And what I'm going to do is sit tight with what I've got and take advantage of opportunities. I'm going to become more of a trader. I'm going to find more money to go into the market so that I can take advantage of the downturns in Google and Amazon, knowing that they're going to have a split in the next couple months, which is going to give them an upturn. I'm going to take advantage of some stocks like ASML. I'm going to watch my big six very closely and see if there's opportunities as this market reacts to inflation and the other elements of higher interest rates, the war, and give me a buying opportunity. In the meantime, I want to take advantage of extreme moves. This reminds me back to the 2020, March of 2020, when the market reacted to the coronavirus, that it took all the wind out of good companies that we know that are going to come back. We know that Amazon and Apple and Google are presenting us opportunities to buy now. NVIDIA is going to be a major player not only in artificial intelligence, but also in the EV market. I'll show you a video about that in the coming days. But this is a buying opportunity. We will probably go to a recession, but I'm going to react on the long term, not the short term. All right. I believe that we have history repeating itself, and if you have the courage to sit back and the fortitude to deal with it, and if you can raise some cash, and you are going to have some tremendous buying opportunities. The first two I would ask you to look at is on Google and Amazon, and that's because they are being depressed right now. Because as interest rates are going away, there is a stampede away from the Nasdaq market, and these are two stocks that in the next, I believe, I believe Google's in July is going to split, and Amazon's going to split in May. And psychologically, they're going to have some influx of cash because psychologically people are going to say, oh my, Google's now down around $150 a share. Now's the time to buy it. Same for Amazon. Amazon will be 150. Probably Google will be somewhere. I think they're going to be around. I'm not sure. But then the other stocks I think that you should be looking strong at are Nvidia, Apple, Microsoft, even Tesla. Tesla is going to take a beating down, and this will be a time to go in. So what I'm going to suggest you do now is look to the stocks that you really want to own and set a price target. Go to the presentations that Wes makes that shows you where the Fibonacci entrance price is, where the support levels are, because we're going to be challenging those support levels. Now, the other thing that you can do as a result of this is do the same thing we did back in March of 2020, when the fear was overwhelming from the coronavirus, and we started doing some swing trading. We started buying some stocks that we knew were going to come back. We knew McDonald's was going to come back, and Valero Oil and American Express. They're good, solid companies, but the fear of the virus took the prices down. The same thing is happening right now to those same stocks, as well as Google, Amazon, Nvidia, Apple. Microsoft is gapping down. These are buying opportunities. These are the times when you need to say, where can I find some money that I can go in and take advantage of this opportunity? A similar opportunity that happened in the late 70s and early 80s is happening right now. The Fed believes it has to destroy your demand. It has to get you to pull back your strings and say, I can't afford this right now, so that interest rates can come back down and the economy can get back on solid ground. Whether they're right or wrong, I don't know. But what I do know is the world you live in is going to change as a result of disruption resulting from technology, in specific artificial intelligence, and this market's going to explode after we get over this road bump. Talk to you again tomorrow.